Good evening, good evening. What's going on, everybody? Shout out to y'all. Welcome back to the live stream. Make sure y'all hit that like button, subscribe if y'all brand new. How's everybody's day going? Shout out to y'all. How's everybody's days going? What's up, Ed? What's up, George? What's up, Ryan? What's up, Jay Mason? What's up, Texas Plates? Shout out to the Bay Area. I'm gonna do the roll call here in a second. What's up, Lawrence? What's up, Chickasaw? What's up, Lenny? So what's in the news? We got some good news today. Positive sentiment to the market. What's going on, everybody? What's up, Scott? What's up, ZZ? Say you've been waiting for this live all day. Yeah, I gotta pretty much let everybody else get out the way. You know what I'm saying? Everybody fighting for views and live, likes. Everybody scrapping for the news headlines. So I'm gonna get into the price action. I'm gonna cover the headlines, but appreciate y'all waiting and being patient for me. What's up, Shy Swag? What's up, Gabrielle? What's up, Daryl? Definitely appreciate y'all joining the live stream. So let me go ahead and get my roll call out the way. Y'all do the roll call. Shout out where you're from, city, state, country, region, or wherever you're at in the world. Go ahead and shout that out. If y'all just joined the live stream, make sure y'all hit the like button, subscribe if you're brand new to the channel. We got the Bay Area in the building. Shout out to the Bay. Shout out to Los Angeles, California. Shout out to Kansas City. Shout out to Austin, Texas. Shout out to Florida. Shout out to Vancouver, Canada. Shout out to the entire Canada. Shout out to Chicago. Shout out to H-Town. What's up, Ike from Jersey? Appreciate y'all joining. Definitely appreciate y'all joining. So how y'all feeling today, man? First of all, I want to congratulate everybody who's been in this space or crypto for the past 4 or 5 years that's been invested into XRP. I want to go ahead and congratulate y'all because y'all have endured a lot and we still got a long way to go. So, hey, just another day that passes by. So this is the time to focus up pretty much. What's up, Jay? You say you feeling great as lately? Shout out to you. So for those that are still working their 9 to 5s, you know, you're one day closer to financial freedom and freeing up your time so that you can live this life, because we only got one life to live and we trying to free up some time. So shout out to y'all. So let's go ahead and come over to the headlines. Let's go ahead and get that out the way, and then I'm gonna come over to the charts. Let's come over to the headlines. If y'all didn't hear it today, well, I guess I'm breaking it this evening. I'm pretty sure most of y'all have seen this already. Brad Garlinghouse, his video that he released, it was kind of giving AI, and it was definitely pre-recorded, but let's go ahead and review that.
As many of you know, just over 4 years ago, the United States SEC filed its lawsuit against Ripple. I'm finally able to announce that this case has ended. It's over. Sitting here today and reflecting on 4 years ago, it seems very clear to me that this case was doomed from the start. In so many ways, it was the first major shot fired in the war on crypto. I truly felt like I knew then that Ripple was not only on the right side of the law, but I felt that we were also going to be proven to be on the right side of history. It really, I think, sends an ominous sign for innovation around cryptocurrency in the United States. Picking winners in general has not been something the U.S. government should be in the business of doing. I think the judge realizes this is not just about Ripple. This will have broader implications. As Mary Jo White, the former head of the SEC, has said publicly that she views this as a dead wrong, and the SEC is dead wrong on this decision. Ripple is the first company with the resources, determination, and grit to fight back against the agency's overreach. And today, this journey finally concludes. Today is a victory and a long overdue surrender by the SEC. The SEC, under Chairman Gary Gensler, went after the whole industry, using the same arguments they used against us. They weren't out to protect investors. They were out to intimidate and terrorize. the regulator whose primary purpose is to protect investors went all in on a non-fraud, victimless lawsuit and wiped out $15 billion of value from innocent XRP holders. The SEC was the market manipulator. The SEC wasn't seeking justice. They were seeking to win a case at any cost. Forces inside our government aligned with the SEC and embarked on a campaign of debanking anyone associated with the crypto industry. This was lawfare, a war of legal terror. Fortunately, the judge rebuked the SEC multiple times in this journey. First, for lacking a, quote, faithful allegiance to the law. The SEC was sanctioned in our case for discovery abuses, and the pattern was repeated in other crypto cases.
Well, let's just say they're trying to confuse you.
We won then on every critical legal point, proving that the digital asset XRP is not a security. That is now the law, and those wins have laid the groundwork for policymakers to adopt a set of rules for crypto that are in line with nearly a century of securities law. With today's news, the war on crypto has ended in defeat for those who turned our own government against a technology and an entire industry. I'm heartened that we have paved the way for other industry players to see the value in not backing down, and for others to use our legal playbook to fight back. We are now closing a chapter in crypto history. I think we're all stronger for our prior litigation successes and today's landmark victory. Progress is worth fighting for. We won multiple pro-crypto victories at the ballot box last year. It's time to make the U.S. the crypto capital of the world. Thankfully, we have new leadership in executive and legislative branches of our government. That leadership is actively seeking a rational and constructive way forward on crypto. Let's make the most of this. This is an incredibly promising moment. Let's come together. Let's leave the tribalism behind. But let me make it clearer that my main message, what Ripple's main message today, is about gratitude. It's gratitude to everyone who stood by us, to every Ripple employee, to the incredible legal team here at Ripple, led by the best chief legal officer in the business, Stu Alderodi. Gratitude certainly to the XRP family, to our customers, to our partners. Thank you. We couldn't have won this battle without all of you being behind us and working together. I truly believe we all agree there's immense opportunity with the largest economy in the world finally taking a pro-crypto and pro-innovation approach to build this technology in order to solve real-world problems for people around the planet. This was a fight Ripple never wanted, but one we knew we had to win. And today, emphatically, we have. Thank you.
All right. So that seems like it was pre-recorded, and it was already baked into the price, pretty much. All these things at 9 o'clock sharp, the market just shot higher. I'm gonna review that when I come to the markets here in a minute. But that definitely was pre-recorded. They probably recorded that like 2 months ago. To hell if we know. So I'm just leave that for y'all to think about. So, and it was given AI, artificial intelligence. So the next piece of news I want to come out, I want to check Brad Garland's house. He went on Bloomberg this evening. Let's go ahead and see what he had to say. I haven't watched this yet. I pretty much waited to now to see what he was saying. So let's go ahead and review what Brad Garland's house had to say at Bloomberg.
This has been a long battle. How much certainty does this provide? Is the entire case over?
So this provides a lot of certainty for Ripple, for frankly me personally, because the SEC had sued me. The SEC has abandoned their appeal. And so they filed suit in December of 2020. We won on the key parts of the case in the summer of 23. Judge Torres made a ruling that XRP in and of itself was not a security. That's almost a verbatim quote. The SEC filed an appeal about 8 months ago, and what they've now agreed is that they're going to drop that appeal. We still have a cross appeal pending, and so we go from being defendant really to plaintiff. So we now are in the driver's seat to determine how we want to proceed.
Are you dropping it?
We're going to see. It feels a lot better to be on the offense than the defense. You know, 4 years, we spent over $150 million defending that case. Not just for Ripple, but for the whole industry. I think it was really important that this SEC, the Gensler SEC, was really trying to bully and continue lawfare, filing lawsuits and lawsuits and lawsuits against crypto companies. That's over now, and I think that's great for the U.S. crypto industry and, frankly, great for crypto at large.
I mean, to that end, if you're looking at a new SEC, why not drop the case at this point? Why not clear the why not clear the water?
Well, that certainly is an option. I mean, again, it's clear the SEC has said, you know, I think in retrospect, never would have brought this case. The judge did rule in certain instances back in 2015 and 2016, some XRP sales that we sold to accredited investors, to institutions, that those had constituted a security. And so there was a $125 million fine that's sitting in escrow. We wouldn't mind having that back. That's on the table. And I think there's some nuances to how this will play out. But it was important for us, for really the whole XRP community, for them to know that the case is over. For all intents and purposes, the case is over. The SEC is no longer pursuing this.
But to that end, to your point here, the court decision had ordered you to pay a $125 million civil penalty for exactly what you're talking about. Is that $125 million paid? Is what you're saying that's still up for dispute?
Yeah. Well, it's not in dispute. I mean, that's sitting in an escrow, and depending upon whether or not we decide to continue with our appeal, we could walk away and the whole thing would be done. On the other hand, when you have a case where there were no investor harm, no investors lost any money, you're kind of like, wait, why are we here? And it really goes back to Gary Gensler fighting a fight that was about power grab, that was about overreach of the bureaucracy to try to take a new industry. That what we're seeing now happen in Washington is smart legislation will come forward.
This is all a script to me. Brad Garlinghouse had a whole itinerary today. He was going to drop that video, release it on social media. He was at an event earlier this morning, and then he called Bloomberg in the afternoon or during lunchtime. So this was definitely a coordinated thing going on. And I'm not going to play this whole video, but we're going to just get bits and pieces of it. If y'all just joined, make sure y'all hit that like button, subscribe if y'all brand new, and shout out to y'all.
You're seeing that happen with stable coins in real time. And I think you'll have a market structure bill, is what it's described as, to provide clarity and rules for the SEC and CFTC.
We will look at the bigger picture. Right. We're going to have you for a little while this morning. But do you think that part of this means fighting it till the very end to make sure even that part of uncertainty around being sold to certain investors classifies as a security? Is that what you are fighting for ultimately at this point?
Well, I mean, at this point, all we're fighting for is, do we want to fight to get the $125 million back? Look, I'll be honest, would I have walked away from that before they appealed, before President Trump put Paul Atkins and Scott Bessent and David Sachs as critical, key, very smart leaders in this industry to bring this industry back on shore? I would have walked away. Now you look at that and you're like, this case in this SEC never would have been brought. And so where we find ourselves is, great, there's a clear legal victory to say XRP is not a security. That was good for the industry. But there's pieces of it that we think could be kind of cleaned up. And the question is, do we want to fight that fight, or can we come to an agreement with the SEC to drop everything? The
whole idea that this wouldn't have been brought under this SEC, have you had that specific discussion with Paul Atkins and with David Sachs?
Well, Paul Atkins hasn't yet been confirmed. He's a very knowledgeable guy about this industry. And
have y'all seen this today? Y'all let me know in the chat. Have y'all seen this today? I'm sure most of y'all have, but I'm sure there's some people that hasn't seen this. But I don't want to take too much time over here. Y'all, I already know I want to get to the charts, but have y'all seen this today? Shout out to you, Claude. Shout out to you, Lenny. Most definitely. It definitely was dropped prior today, but have y'all seen this? Give me, okay, Ike, you haven't seen this? So like I figured, some people have not seen this today from the CEO of Ripple. I'm gonna go ahead and play it out then. I'm just trying to get, okay, we got a lot of people that have not seen this, so I am clearly catching up on some people. So here we go.
And has been for a long time. But I've had conversations, I won't comment on specifics, with certainly, I think David Sachs would agree that this is a case that didn't make a lot of sense in the beginning. Again, there was no investor harm. This was about Gary Gensler waging a war against this industry. It's interesting. I want to also point out that the affiliated token, of course, XRP, has been up roughly 14%, now about 13% in the last 24 hours. One thing a lot of people had looked at, we're thinking a lot about how the administration is handling crypto assets, particularly outside of Bitcoin. Why do you think XRP wasn't specifically named in the executive order for the digital asset stockpile? Well, so XRP was named by the president on Truth Social. He posted something saying that there should be other tokens, that there's going to be a Bitcoin strategic reserve and then a crypto stockpile that would include things like XRP. But days later, the executive order didn't include it. Why was that? I don't know what specifically was in the executive order. My understanding is there's going to be a Bitcoin strategic reserve. There'll be a crypto stockpile representing other cryptos. And I would expect that will include XRP. Look, at the end of the day, I think the stark contrast is in the Biden administration, we couldn't get a meeting with people at the White House. Now we're welcomed into the White House. And that's just a massive change. I think we want this industry to thrive in the United States. We don't want to push it offshore where you have fewer regulations.
I think the reason I keep pushing you too is because I think now it's widely accepted that this is a pro-crypto administration. But the details, that is what's causing an overhang, the uncertainty of the details. So to the extent you have confidence, right, about XRP being in that stockpile or otherwise getting more support for an ETF, for example, where does that confidence come from and what kind of timeline do you see it happening on?
So I have immense confidence on the ETF. I think there's 11 different filings pending with the SEC to launch ETFs from everybody from Bitwise to Franklin Templeton and a whole bunch of people in between. I think those will be live in the second half of this year. We have seen even outside the United States, you have live ETPs. And at a time when a lot of outflows are exiting some of the crypto ETFs, you're seeing inflows into XRP. And I think that's because you had this false negative pressure from the SEC, this kind of, you know, an exogenous hand holding things down that's now being released. And that's great for the market. That's great for builders within the XRP ecosystem globally.
One more on the stockpile.
Yeah.
How much XRP would be in it? Where does it come from?
Well, my understanding of what I read about I think there are some questions and that, you know, the devil may be in the details as Treasury implements some of this.
Absolutely in the details.
But my understanding is that the stockpile will be represented by seized other cryptos other than Bitcoin that then will be in that stockpile. So to the extent that various law enforcement agencies have seized cryptos, which would include XRP, that those would go into the stockpile in addition to the Bitcoin strategic reserve. That's my understanding.
We have been talking here about a big moment for you and for your company, of course, a rollback really of the tensions that had been brewing with the SEC. And let's talk about the next phase. One thing I'm really wondering about now that there's more clarity for you is that is an IPO, frankly, in your future now. We talk so much about the potential for the XRP token to be wrapped in an ETF. That is a method of listing. Right. So is listing possible now for you for Ripple?
Well, it's certainly something that is possible. The United States SEC under Gensler was so hostile to this industry. I mean, ironically, they approved the S1 from Coinbase and then sued them for doing the things they said they were doing. So this SEC, fortunately, is going to be, I think, very constructive and positive for this industry. So I think that's available, and I think the company's at a stage where we could consider that. That being said, it isn't a huge priority. You know, I think most companies are going public. Raising capital is something that is high on their radar. You know, we have been in a very fortunate position to be able to grow the business organically. We're also, frankly, more proactive in looking at acquisitions. This is an industry that finally is going to be able to thrive in the United States, the largest economy in the world. And I think the industry is still underestimating the shift from the headwinds to the tailwinds. That's going to make a bigger difference than people think. And finally, the U.S. market is really unlocked.
So it sounds like what you're saying, acquisitions are almost more of a priority now than an IPO for you. So then what would you be looking for to buy, and how big are you willing to go?
Well, I'm not going to name names, but look, Ripple at its core is a blockchain infrastructure company. We sell our technologies to business, primarily financial institutions, and we'll look at other things that are blockchain infrastructure companies. I think there will be consolidation this year. There's a lot of excitement about some of the changes, and we will lean into that for sure.
So when you think about what's possible in terms of financial institutions, there's been a lot of conversation about loosening of regulations and red tape when it comes to the financial industry and its interactions with the crypto community. What are you actually seeing happen? Are banks really warming up in a way that's significant right now?
I mean, I think unequivocally, yes. Just in the last few weeks, I have seen U.S. financial institutions go from being like, look, we're just not going to touch it because we don't want the extra scrutiny of the regulators, which, again, may or may not have even been legal, given these are legal businesses. But you have large banks who used to say negative things, now saying positive things. I think the two areas you'll see the most activity in the short term, one is around custody. These are banks that want to be able to custody, particularly when you see real-world assets being tokenized. You need to be able to safely manage and custody that for customers and potentially for the bank. And the second is around payments. I mean, the global payments infrastructure still remains very dated. Wires are slow. I just had a wire that was sending over euros disappear for 5 days. That's surprising in a world of the internet.
So one part of that payments infrastructure that I'm watching really closely is, of course, stablecoins.
Sure.
There is starting to be more clarity in Washington, and you're seeing people starting to use stablecoins in really interesting ways. I think about Robinhood, for example, using stablecoin in terms of facilitating 24-hour trading. What's next? I mean, if you think about the next forefront of stablecoins now that the U.S. is getting toward clarity, what's possible?
Well, again, I think we're underestimating how big that might get. Today that market's about $230 billion. So I think some smart people think that may go up 10x in the next 5 years. I think that's probably right. I mean, the two leading players in Tether as well as USDC are both, I think, poised to do well in that market. Ripple launched our own stablecoin at the end of last year. That's already ahead of our own internal forecasts in terms of where we are at this point in the year. Still, we're small, but the goal is by the end of the year for RLUSD, Ripple stablecoin, to be one of the top 5 in the market by the end of the year. And I think the whole market's going to grow dramatically over this year.
So what does it take you to get there? Who are you pairing up with? Are you creating some financial partnerships in order to make RLUSD more of a household name?
Yeah, for sure. I mean, even today we had more listings go live for RLUSD on some global crypto exchanges. Anytime you do something new, it takes a minute for that kind of, the pun of the ripple effect of seeing how that plays out. And so we're seeing that happen in real time. So I'm really pleased. And again, as I said, we're ahead of our Q1 forecasts of where we expect it to be. So we feel really good about that progress.
Given through what you have gone through with the SEC, I think one major question is how tokens list in the future. What do they mean? How are they classified? Now that you're talking about many other, say even private equity companies looking to tokenize their funds, venture capitalists, Cathie Wood told us yesterday she's considering that for her own fund. What does this mean? What are the rules of the road? Are people going to list and put the cart in front of the horse as they do so? Yeah.
Well, look, I think tokenizing, like what Cathie Wood's talking about, democratizing access to different investment vehicles and different investment types is very compelling. Even, imagine Shark Tank enabling the participation by different sharks. Like, there's some really interesting stuff you could do. Right now, Congress, it seems, is more focused on getting stablecoin legislation passed. That went for markup last week, and I think you'll see that potentially in front of the president in weeks. The other piece of legislation I think will move quickly after that is kind of the market structure bill. Last summer, something called FIT 21 passed the House, did not get through the Senate. I think that a market structure bill like FIT 21 will come before Congress. Hopefully before the summer recess, we'll see that pass also.
But you think about how many exchanges are now looking to loosen their listing standards already on the heels of lighter oversight, and the cart before the horse question. Do you think that people are getting a little ahead of themselves and listing things that shouldn't be listed?
Well, look, I don't think about it as lighter regulation because, frankly, I think the industry wants to be regulated. And what we've been saying for years as an industry is we just want clear regulation. We don't want lawsuits just claiming one thing and the next week contradicting themselves, which is exactly what Gensler's SEC was doing. So I think just the fact that we have an SEC who's trying to work constructively, instead of trying to sue more companies, let's actually work and let's codify and get legislation to provide that clarity.
But again, if you don't have that clarity, what you saw years ago was an ICO boom where tons of things that were raising money never worked out for the people that were buying the tokens or the coins.
Look, I agree, and I said then that I think of some of these ICOs were a lot more like IPOs. They were securities. The problem is the SEC then kind of used that to just blanket and say, Gensler said before he was SEC chair, he didn't think they were securities. And then after he became SEC chair, is kind of his power grab. Gensler wanted everything under his jurisdiction. So I think obviously that ICO boom went away, and there's lots of ways this government can regulate and manage fraud and manage criminal activity. And that did happen. People did go to jail.
I have one more question for you about Ripple and XRP in particular on the supply and how it's managed and the unlocks. Is there anything you would do to change the amount of supply brought to market? Can you do that? How does that exactly work? Because there is a level of dilution for XRP when more supply is brought in on a regular basis.
So this is one of the things I'm glad you asked about, because there's frankly misinformation. Sometimes, disinformation, people spreading falsehoods out there. The amount of XRP that was created in 2012 when it was first started, when that blockchain was first started, was 100 billion units. That can't be increased. It's slightly deflationary, and now there's about 99.9 billion units. Ripple owns about 42% of that supply. We have had, and for, I guess, 8 years, we published something called the XRP Markets Report, where we share how much we are introducing into the market, because we want that to be predictable. And that has been the case for many years now. And so we will continue to make sure that's very predictable. At some point, maybe we won't be selling as much. We'll see how that plays out in the future. But right now, frankly, we get criticized for owning too much, and then we're criticized for selling some. But we want to do that in a constructive way, which is what we've done for years.
All right, y'all. Hopefully, if y'all didn't catch that earlier today, that was Brad Garlinghouse giving his perspective, what Ripple is about to do and upcoming. If y'all just joining the live stream, make sure y'all hit that like button, subscribe if you're brand new. I don't know how much Brad Garlinghouse y'all want to hear. He was also at one more event. I'm not going to play this whole video, but I definitely didn't catch this one. But he was at the Digital Asset Summit in New York today. So he was definitely making his rounds. And let me go ahead and bring that up right quick. And I'm not going to play this whole video. And then after this, we're going to come over to the markets. We're going to look at the charts. And then I'm going to get up out of here.
It's on Twitter, but Brad can probably save you the time and give you a summary. There's an update to the appeal.
It's always good to make news while here at Digital Asset Summit. Just a few minutes ago, right before we walked up here, I posted on X that we can now announce that the SEC is no longer pursuing their appeal in the Ripple case. We're obviously, thank you. I've been
Should we get a little standing ovation? I can show your feet. This is a great
The
moment.
whole industry, this is a good thing.
Come on. Okay.
So it's been almost 4 years and about 3 months since the SEC originally sued us. Certainly a painful journey in lots of ways, but as we said then, two things I'll highlight from what we said then. I really deeply believed that we were going to be on the right side of the law and on the right side of history. It's something we said then, and it's something that I feel kind of vindicated looking at this now. The other thing I would say, which there's a video I posted on X a short while ago, and one of the things I point out is the system just feels broken, that we had to fight this fight for the industry. And you had an SEC.
You know what? I'm going to let y'all go check that one out. He's pretty much going to regurgitate the same thing he just said on Bloomberg. So if y'all want to go check that out, just type in the Digital Asset Summit 2025 New York /Brad Garlinghouse. So with that being said, I don't want to Brad Garlinghouse y'all to death today. I'm sure a lot of y'all caught the news, but let's go ahead and come to the charts. What's up, everybody? Shout out to you, Sneaky. Shout out to you, Claude, Chris, whatever, everybody just joining. So today in the market, let's go ahead and start on the 3-month time frame. Y'all know this is the long-term time frame. This is the 3-month chart. Every one of these candles takes 3 months to complete. We have currently 11 trading days left to end the first quarter. So that was a big deal because we're still consolidating. But right before the first quarter ended, they went ahead and ended, or the SEC went ahead and ended the lawsuit against Ripple. And we had a lot of people, I was looking online, a lot of people was disappointed today because the market didn't do what they expected it to do. So I'm not concerned about none of that or what people got to say. A lot of people don't know what's going on in these markets. Most retail don't know that these markets are algorithmic and it's not going to do with how you feel. So remove your emotions because the algorithm has no emotions. There's no emotions to the algorithm. So currently XRP is trading at 251. If you notice, we're still trading inside of this ghost pool over here on the left. We're still hanging out inside of that. Let me see if I can bring that up. Right there. So what I did was I take a Fibonacci from first of all, you never ignore large wicks. Never ignore large wicks. I take a Fibonacci from the opening price up to the high. And there are hitting price ranges that price action will refer to. So that's referred to as a ghost pool, because there are levels hidden within the algorithm, within the market, that we range from. So just remember, we're hanging out inside of this range right here. We already took out the previous all-time high, and now we're just ranging sideways. We have 11 trading days left. 11 trading days left to complete this quarterly candle. So what I'm gonna do next is I'm gonna drop down to the the monthly time frame. That's the price action. Really nothing much has changed. We just went up, 20 cents, 30 cents, nothing really exciting. So I see a lot of people still fatigued. Oh, let me go back out to the 3-month time frame as well. Let me show y'all this fair value gap. So what I want to see is, how do we close March? That's what I'm asking myself. How do we close the month of March? Do we see this large fair value gap, this large BISI that I made aware of y'all? If we start to move away from it, if we start moving higher and away from it before we end the month, I'm going to prefer that the market doesn't come back down and refer to this level down here. I'm just going to prefer that. That was positive sentiment today with that court case ending. So again, things are moving forward. So this is still up in the air. It's not valid until we close this candle right here. So there's a gap below, a gap at discount down here. I'm going to be watching it. And also I want to see it start moving away from it. If we move away from it, the likelihood of us returning to it is unlikely. So right now, on the monthly time frame, we got 11 trading days left. 11 trading days left. So what I want to do now is, let's go ahead and drop down to the weekly time frame. How many more days we have in the month of March? Let's go to the economic calendar right quick. I like to use this for the economic news. So today we had FOMC meetings and federal funds rates. What did they do today with the rates? Let me go ahead and come over here. Globalrates.com. I'm gonna go to interest rates, central banks, and America. So they 12/18. So they didn't do nothing today. So I'm assuming they didn't do nothing today they paused it. Okay, because it's showing that the last time they changed it was back in December. So the current rate right now is still 4.75 basis points. So it's they're just pausing the market. So if they continue to pause it, again, we're gonna still expect volatility in the market. So okay, that's what happened with the rates today. Back to the economic calendar, they had FOMC meetings. I don't care what happened. Y'all can let me know in the comments, but I don't know what happened in the FOMC meetings because it's irrelevant to me. So tomorrow, which is Thursday, March 20th, we got high impact news at 7:30 a.m., unemployment claims, and then we got some medium impact news. And then Friday, no news. And then after this week, we will go into pretty much the last week of March, because we'll roll over. March will extend into a 5th week, not a whole week, but it will roll over to that 5th week. And Sunday and Monday will be the last day of March. April 1st will be on a Tuesday. So March will have an extended week that will show up in the charts, which will be a 5th week. So if we just look out to the next week, we just have high impact news on Monday, which are the red folders. And then we also have high impact news on Thursday. And then the orange folders are medium impact news. So that's the economic calendar forecasting coming up in the week. But right now, we still got to get through Thursday and then Friday. With crypto, you never know, because like today, nobody anticipated that the SEC will drop the court case. We didn't anticipate that. So here we are on the weekly time frame. Who remembers? Because I live streamed a few days ago. Who remembers what I outlined a few days ago, especially the ones that have been here? I outlined I wanted to see at minimum. What did I say at minimum? I wanted to see, and this tells you that I know what I'm talking about, and the markets are algorithmic. So who remembers when I outlined that high right there? If y'all paid attention to the live stream a few days ago, I outlined that swing high right there, and I said what? I asked y'all, what side of the market are we most likely going to want to reach for? Some of y'all said lower, some of y'all said nothing. And then I said, hey, I want to see at minimum the buy side liquidity be liquidated. And at minimum, that's what we did. We went up to that buy side liquidity and we took out some previous days highs that you could find on lower time frames. So there we go. The markets are algorithmic. How did I know that? How did I know that? Y'all let me know. How do I be knowing this stuff? How do I be knowing this stuff? So what are we doing right now? What's the market profile? What current profile are we in? What current profile are we in? What's the current market profile? I'm gonna throw up the weekly fair value gaps. So boom, there go weekly. There are weekly fair value gaps. Right here, we got a BISI. We keep referring down to it. That's a discounted PD array. Up here, we got an inversion. We got two inversions up here above the market. Well, this is a SIBI, and then there's a small SIBI right here. Y'all are all correct in the comments. Consolidation, that's the current market profile. So the market only does four things: consolidation, expansion, retracement, reversal. It's real generic, it's basic, it's simple. And the market is always going to seek liquidity. Shout out to y'all just joining. Make sure y'all hit that like button, subscribe if you're brand new. So what I want to do now is, I already told y'all what at minimum what I wanted to see so far this week, and we did that. Come up, took out the buy side liquidity. So from the weekly time frame, let's go down to the daily. Let me see what the daily looks like. So if we're on the daily time frame, you still can see that consolidation. But also, let me drop back out to the weekly and show y'all that wick. Remember, this wick right here, I'm still referring to this wick. This wick right here. Now let me throw up those levels. Let me throw up those levels. Right there. So again, this ghost pool, this is a discounted ghost pool. It is also a PD array. It's a discount array. This ghost pool. Look how the market had trade down to these levels, and you blend it with the weekly fair value gap in gray. So we trade down to these price levels. You see that? Dropping down to discount. You want to be a buyer at discount. You want to be a seller at premium. Also, the market is in the consolidation. And so far, the past few weeks, we have dropped down there several times. So 1, 2, 3, 4, 5 opportunities at discount. Now we're displacing higher, taking out old liquidity left behind by the market makers in the market. Right here, this is a SIBI. This is a premium level. So discount up to premium. We're just ranging sideways, consolidating. Anytime the market is consolidating, we're just looking for liquidity. We're liquidity focused. So let me drop back down to the daily. Today, this candle right here, this was the day that the SEC court case ended. So look how the market reacted. But prior, listen, check it out now. This is how you know this shit is already baked in. And if y'all missed my last live stream, go ahead and go watch that, because I got into high frequency trading. High frequency trading is like central banks are trading at the speed of light. Y'all, most of y'all long-term investors, most of y'all have no idea what's going on in this game. Y'all have no idea what these markets are about. Central banks, market makers, large institutions, they are making money at the speed of light, while you long-term investors are pretty much making money in a lifetime. You're trying to make a large amount of money in a lifetime. It may take you 10, 20, 30 years. But in the time frame that it's taking you 10, 20, 30 years to make money, large institutions and banks are making money at the speed of light. So if you if you don't understand what I'm talking about, go back and watch my last live stream. I do a little deep dive into it, and I get into high frequency trading. I'm not going to get into that tonight. We're just going to keep it real generic, and I'm going to keep that for my Patreon. That's for more advanced concepts. So today, before this candle right here was today, it's already Asia. It's already Thursday in Asia. So we're not in Thursday in the United States yet. So this current candle right here is currently trading in Thursday, which is already Thursday in Asia. Yesterday, which is still today and Wednesday today in the States, this was the SEC dropping the case today. But prior to them dropping the case, where was the market trading down at? So I'm gonna ask that question. Prior to the case ending, where was the market trading at? Trying to see what y'all know. I'm trying to test y'all knowledge in the chat. Where was the market trading at prior to the day of the SEC dropping the court case? And smash that like button, y'all. Smash that like button. There you go, Lenny. Shout out to you for being in the front of the classroom. The market was at a discount. And remember, let me show y'all right quick. Remember, and if y'all don't follow markets every day, I don't expect y'all to understand what's going on. So look back here. This candle right here. This was this candle right here. This was from February 28th, which was the last day of February. Below that low, I'm gonna highlight that low right there. That low right there is sell side liquidity. And let me remove this ghost pool to make it real clear. I'm gonna remove that ghost pool for y'all. I'm gonna hide that. Boom. So below that low right there, we all know sell side liquidity. Right below that low is pending orders, pending buy orders at discount. So the market drops down below that low. Smart money accumulates. If you drop down the lower time frames, you will see what I'm talking about, how the market reverses and goes higher. And remember, imagine being a large institution and dropping millions and hundreds of thousands of dollars into the market during this time period down here, and then holding for several days. Whole time y'all think it's consolidating, but they was already in the market. So today, boom, price breaks out. Not really, it doesn't break out like a large expansion candle, but it breaks out. But you know how much you know how much capital is in the market from right here at this low to boom today? You know, do you realize how much capital is being flowing through the market in that small fluctuation of price? From, let's say, from 190 all the way to 258. Do you know how much capital is flowing in this market right here? Just on leverage trades and trades, period. Do you know how much capital is flowing in the market? I don't think y'all long-term investors understand the type of games that are being played. Because all I got to do is drop down. If I drop down the lower time frames, you will see. Let me, for example, let me go down to a 15-minute time frame. Go down to a 15-minute time frame. And this is what I'm talking about. There goes that old low right there. There goes that old low right there. The market drops down. Is it random that it goes down to the midway point of that weekly fair value gap? Do y'all think it's random? Do you think it's random? And what I'll be trying to prove to y'all, this highlighted area right here, let me go ahead and highlight it. This area right here, somewhere in that price action right there on a 15-second chart, a 1-second chart, or below a 1-second chart. Like I'm talking about, y'all see me, if y'all watch the last live stream, y'all see me trying to trade on a 1-second time frame. If you missed it, go back and watch the live stream. But imagine dropping below a 1-second time frame to nanoseconds and milliseconds and placing massive orders in the hundreds of thousands and the millions of dollars. Imagine that. And then holding that position, and you can see it going higher, and just holding that position all the way up to the day of the court case ending by the SEC, which was today, and then getting out the market, making hundreds of millions, millions of dollars, double-digit millions. I don't think y'all understand that. That's why I be trying to bridge the gap between y'all. But let me go back out. Let me go back out. The time frame was on the daily. So that's pretty much what I'm trying to show y'all. Like that little small price action from here up to here, hundreds of millions of dollars was made. I'm gonna say that hundreds of millions of dollars was made. And that's why a lot of retail was disappointed, because you're not playing the game. You're not in the game. And I'm not trying to convince you to get in the game, but I'm trying to tell y'all not playing the game that these large institutions, these firms that have bots and algorithms, you're not playing the same game. It's not a fair game. So y'all gonna have to wait longer for price to come to where you think it's gonna go. And it's coming. But at the end of the day, it's more efficient. It makes more sense for them to play the game that I'm showing y'all, getting in and out the market, So what I want to do now is let's drop down to the 1 hour time frame. 42 people in the building. Make sure y'all hit that like button, subscribe if y'all brand new. So let me throw up my weekly dividers. These are my weekly dividers. And remember, I don't remove any, like for about 7 to 8 weeks now, I have old levels in my charts that I have not removed. So look at last week's high right there. Look at last week's high. You already know at the end of every week, and if you're new to my channel, the markets are algorithmic. But at the end of every week, I look at previous week's highs and lows. Look at previous week's high. Do you think it's random that the market, boom, takes that out? And then look over here. This high right here was the high from Friday 2 weeks ago. This high right here was the high from Friday 2 weeks ago. We trade up, go directly to it. Now we're consolidating, we're ranging. So not only the market is always seeking liquidity, I'm showing y'all, proving it to you real time. Market is seeking liquidity. We rally up, take out that high right there from 2 weeks ago. And now y'all tell me in the comments, what is this? What is this? What is that? There you go. It's a BISI. It's a buy side imbalance, sell side inefficiency. It's a fair value gap. Shout out to y'all that's learning and sitting on the front row of the classroom. It's a buy side imbalance, sell side inefficiency. So after taking out last week's high, which is right here, market seeking liquidity. It took out this high right here, and then took out the high from Friday 2 weeks ago. That high right there. All these levels are still in my market, are still in my chart. If I drop back out to the 1 hour, go back out to the 1 hour, I'm just going to show you how many of these levels are still in my chart. I need to zoom out. 4 hour. Again, look at all that liquidity that I have left behind in my charts that the market is referring to. All these highs that are buy side liquidity, and we're eventually going to come up and seek them. And I can go all the way back out to January. Yeah, I can go all the way back to January. So again, old lows, old highs, liquidity. There's a 4 hour right here. There's a 4 hour BISI that I'm gonna go ahead and highlight because we could potentially draw down into that. So I'm gonna highlight that 4 hour BISI right there. And I've seen a lot of people frustrated. I also seen somebody, I seen one of those popular XRP influencers pretty much saying, man, now that the court case is over with, what are we gonna talk about? And get ready for that. Just get ready for it, because they don't have shit to talk about. What else they gonna talk about after all this shit settles? And because they definitely don't know how to read these markets. They're not gonna show you how to read these markets, because when you know how to read these markets, you always have something to talk about. There's always, and I don't care what asset class, you always gonna have something to talk about. There's something that you can always analyze. So this skill set never goes away. So hopefully I'm putting y'all on the game. When people start running out of shit to talk about and they're regurgitating and the court case is over and things are starting to move, and the next thing that's going to happen is people are going to, a lot of people going to be FOMOing people on when to sell, where to sell at. Influencers are going to be like, well, I'm about to take, and watch how many influencers start taking profits when they said they was going to hold to a certain price level. A lot of these people are going to get out the game because they want that money right now. I'm telling y'all. So just peep game. Just peep game. Definitely regulations are next, Jude. Definitely regulations are next. So I guess that's the next, there's the influencers are about to start running out of content material. They're about to start running out of content material. This is a 4 hour fair value gap right here. 4 hour, which is 4H FVG. So I'm noting that we could potentially draw down into that. That's in the orange. And then as I drop down to the 1 hour, that is the blue or turquoise. That is a 1 hour fair value gap. So right now, yes, we're in an expansion because of today. So this candle right here at 9 o'clock, That was when the court case, that's when Brad Garlinghouse. So let me come over here right quick. Let me see right quick. Let's come over here. 1 second. Yeah, so right here, this is when Brad Garlinghouse, I'm trying to get the time when he announced this, or whatever time. So, okay, 8:05. I'm not sure if that was Eastern Standard Time or Central Standard Time. So 8:05 today, AM. And I'm thinking that was Eastern. He was on New York, so I'm on Central Time. He was on New York time, so that's 8:05 my time. So 9:05, he came out and he said, this is it. The moment we've been waiting for. The SEC will drop its appeal and resounding victory for Ripple, for crypto, every way you look at it. The future is bright. The future is bright. Let's build. And that was at 8:05 Central Time. So let's come back to the charts. So that was 8:05 right here. This candle right here is 9 o'clock, which is the same time he announced this. So do y'all think y'all don't think it's already plugged into the markets? Y'all don't think that's random? Do y'all think that's random or not? I'm trying to ask y'all. Do you think it's already plugged and played into the markets? Come on now. They playing a wicked game. I'm trying to tell y'all, they playing a wicked game. Let's go to 12 o'clock midnight. That starts the trading day, 12 o'clock midnight. We got previous day's highs. One second. Let me pull this up. So 12 o'clock midnight starts the new trading day. And then I'm gonna drop down to the 15 minutes, go down to a lower time frame. I already got my high time frame levels outlined. It is currently the Asia session. We're just consolidating after taking out a ton of liquidity. Now let's focus on what happened this morning during the New York AM session. So from 8:30 AM to 11 AM, 8:30 AM to 11 AM. That is the New York AM session. Now let's drop down to a 5-minute time frame. So in between these two vertical lines, this is the AM session, New York AM session. So do y'all think it's random? Check it out, man. You can't make this shit up. You cannot make this shit up. This candle right here on a 5-minute time frame says 9:05 AM. 9:05 AM. But if I come back over here to Brad Garlinghouse post, what does that say? And remember, this is my time, Central Time. What does that say? What does that say? And then the video was what? That shit was pre-recorded. Who else is gonna show y'all this, man? Who else is gonna talk about this? Who else is gonna show y'all that the markets are algorithmic, they're coded, and I keep proving to y'all every time, over and over again. This is my time, 8:05 Eastern Standard Time, which is 9:05, My time is 8:05 Central Time. Brad Garlinghouse posted this at 9:05 Eastern Standard Time. So if you come over to the charts and you zoom in, this candle that broke out, and that's what got everybody excited today, the breakout, it opened at 232 and it closed at 242. It made a high of 242 and it closed at 239. But this was the breakout candle at the same time Brad Garlinghouse made that post at 9:05 Eastern Standard Time. Listen, I see this shit all the time. I see this all day, every day. The markets are coded. The algorithmic is not random. How many times have I told y'all it's not random? At the time before it displays, if y'all don't think it's random, what is this right here? Y'all tell me what this is right here. What is that? What is that right there? It's a BISI. So let me go ahead and highlight that for y'all. And y'all tell me, because if y'all been watching my channel, y'all know that it's not, y'all know this ain't random. Y'all have seen me do this many times. Y'all see me do this many times. So is it random that the market drops down to this fair value gap? 905, boom, displays higher. Just like that. Do y'all think it's random? Are you not entertained yet? Are you not entertained? I'm just trying to figure out. Like, come on now, like, hey, I'm about to go into hiding, bro. I'm about to go into hiding. I think I'm talking too much. I think I'm releasing too much information. I think I'm about to go into hiding. The markets are algorithmic. And hey, go tell a friend. Go tell a friend to tell a friend. Hey, man, this man knows something. So it's not random. During the AM session, remember, I always tell y'all times of day. I tell y'all discount. What does the market do? It drops down to discount. Accumulation during the Asia session. Displacement. Boom. God candle. That's what y'all waiting for on the higher time frames, the monthly and the weekly time frames. But this was all within one session. This is what y'all want to see on higher time frame charts. That these candles might last like 30 days. Each one of these candles lasts 30 days, but no. Each one of these candles lasts 5 minutes. That's what y'all missing. So again, I've just proved to y'all, I might clip that up. I might have to clip that shit up. I'm gonna clip it up. Let me stop cursing. I'm gonna clip that up and let's see if the people watch it. Sneaky, you said, damn near every time I go into work, I tell someone about your skill and share the video. Hey, it's not for everybody, Sneaky. It's not for everybody. It's not for everybody. I already know. I'm just here for the people that I'm just the messenger for the people who want to be enlightened. Everybody, you can't reach out to everybody. But at the same time, again, that's not random. I talk about this all the time. That's not random. Is it random that Brad Garlinghouse at 9:05 Eastern Standard Time releases that post in the damn video, that went viral at 9:05, and I'm showing you at that same specific time, market retraces down to a fair value gap, boom, displacement higher on that same candle. Let's see, let's go refine it a little bit more. Let's go down to the 1 minute time frame. Go down to the 1 minute time frame. Maybe I'll make some of y'all a believer now. Maybe some of y'all can are a believer in what the hell I'm talking about and what's going on. And if you're brand new to my channel, you might want to subscribe because, again, I'm doing this on YouTube for free. So at 9:05, yep, 9:05. This is a 1 minute time frame. This further refines what I'm talking about. This candle right here, right before takeoff, today alone, 9:05, right here. This candle right here, 9:05. Brad Garlinghouse post, 8:05 my time, 9:05 his time. Not random. Not random. Not random at all. So it's by the minute, by the second. By the minute, by the second. Can't make this up. So that's what we pretty much did today. We took out previous week's highs, and then you can see how the market trades up, take out buy side liquidity. This high right here was the high from 2 weeks ago. So, and after we did that, that was a strong price movement. A lot of y'all, like I said, nothing happens overnight. Y'all can get that out your mind. Like, you know how you got the community saying overnight, we're going to reach 10,000 or 589. No, the markets don't move like that. The markets don't work like that. They do the same generic things that I continue to talk about. Consolidation, expansion, retracement, reversal. Consolidation, expansion, retracement, reversal. That's the only thing, and that's what y'all been seeing. Look, let me show it to y'all. Consolidation. Expansion. And then we got the retracement. Right there. Retracement down to what? That 1 hour fair value gap. And then we're back in consolidation pretty much. Consolidation. So there you go. It does these same generic patterns over and over and over again. Over and over and over again. So hopefully I enlighten some of y'all about what's going on. If you missed it, just go back and watch the live stream. So, okay, let's go ahead and look at what have we done. We did a lot of damage today. Not a lot. It really was a quiet day. We didn't do too much damage. Let's go ahead and we're currently in Asia session. It's 9:57. We're in the macro. Also, before we broke out like that as well, it was 9:05. That was inside of a macro as well. So that breakout candle, that was inside of a macro. So from 8:50 to 9:10, inside of that window in time, which was a macro, the market, boom, displays higher today. So it's so many things I can utilize and show y'all that the markets are not random. So right now we're just trading inside of this consolidation. We're just trading inside of this consolidation. Let me see what else. I want to find where the liquidity is so far. So let's look at the previous sessions. I want to find the liquidity from the New York session today. I want to see where the lunch hour liquidity was, and I want to see where the PM session liquidity was. So we have this high right here so far today. This high right here formed the high of the day. That's the high of the day. That's previous day's high. It's buy side liquidity. That's where pending orders are. Just above it, right here, this gray shaded area, that is the weekly SIBI on a higher time frame. So we got buy side liquidity. That's where the orders are. The market always seeks liquidity. And then we have this SIBI above the market. Okay, so now what? Let's look at the lunch hour high. Look at that high right there. So now we got two highs stacking on top of each other, two liquidity pools. That means there's a lot of orders that are building up there. Right now, they need to go because today was so explosive, they didn't offer any sell side delivery today. So that's what you're starting to see now. We just expanded higher and made the market inefficiently traded. And that formed that inefficiency, which is that BISI on the 1 hour and the 4 hour. On the 1 hour and the 4 hour. So what we're doing is we're finding the liquidity. We took out the PM session high right here. So it's not random that the market is retracing now after taking out liquidity. Right there. See that buy side liquidity right there? We go up. Trade a little bit high. There's a small little SIBI right here. I'm gonna outline that. See this SIBI right here? There's a small little SIBI on the 15-minute time frame. It's not random that the market trades into that. Small little SIBI right here. Look at the bodies of the candles right here. Look at the bodies of the candle. Go a little bit higher. Remember, we could cut through these gaps, trade back down. We're just consolidating. And then right before we drop lower, look at this candle right here. Boom, precision. Look at that, precision. Now it tanks lower. It's not random, y'all. I'm trying to tell y'all. I don't know how many times I got to prove to y'all that this is not random. It's not random at all. So we got sell side liquidity below the market. So there's sell side liquidity from right here. During the PM session today, 1:30 p.m., 4 o'clock p.m., New York Eastern Standard Time. That's sell side liquidity right there. Now, do you think that liquidity pool right there is random, that is laying right on top of this fair value gap that's shaded in orange on the 4 hour time frame? So that's the top of the fair value gap on the 4 hour, and also sell side liquidity resting right there below the market. So market makers might want to drop down, come down, back down to discount, scoop up that liquidity, and also reaccumulate to go higher. And again, y'all long-term investors, y'all are not in the game. You're not playing this type of game. You are thinking long-term, and I'm gonna hold my position when smart money is making money at the speed of light. And I'm gonna show y'all the example of that here in a second. Let me show y'all right quick. So right now, I'm not even gonna worry about the liquidity down here. There was liquidity from the AM session. I mean, I can mark it out, but we're in an expansion profile currently. We're in an expansion profile. So let me go ahead and mark this out. 8:30. Shout out to my new subscribers. Make sure y'all hit that like button. Subscribe if you're brand new. I appreciate y'all joining. So I'm gonna remove these dividers. We know where the liquidity is in the market. Now let's focus on Asia. Asia session starts from 8 o'clock p.m., 12 o'clock midnight. 8 o'clock p.m., 12 o'clock midnight, New York Eastern Standard Time. So in between these two vertical trend lines right here, that is the Asia session. So let's go ahead and drop down to a 5-minute. It is currently 10 o'clock. We're also inside of a macro. Let me go down to the 15-minute right quick. On the 15-minute time frame, we have a SIBI and order block. So I'm gonna highlight both of them. SIBI and order block. We got the SIBI, sell side imbalance, buy side inefficiency. And then this candle right here, the opening price, that's an order block. Do you think it's random that the opening price of this candle aligns with the midway point of the SIBI? It's not random. So we got two confluences right there. So the opening price, which is a bearish order block. This is a bearish order block right there. I'm gonna highlight that. I can label it order block. So we could possibly come back up into that, but right now, let's see what we want to do. We're inside of that macro. Let's go down to a lower time frame. And also, we traded up into this SIBI right here. So I'm just outlining these price levels right there. These are 15-minute SIBIs. Now, what I want to do now is go ahead and drop down to the lower time frames. But first, we just began the 10 o'clock hour. So I'm gonna clone this candle right here. I'm gonna drag it to 10 o'clock, and I'm gonna go down to lower time frames. Every hour has 4 quarters. So from 10 to 10:15, that's the first quarter. 10:15 to 10:30, second quarter. 10:30 to 10:45, third quarter. 10:45 to 11 o'clock, fourth quarter. So that's what I'm about to demonstrate to y'all. We about to show y'all some of this high frequency that's going on, and a lot of y'all long-term investors, y'all are frustrated because y'all don't know, y'all are not aware of the game in these markets. Y'all have no idea. These institutions are pretty much gobbling up the whole entire market. And what I'm about to do is I'm about to drop down intraday even further. We're going to get to right now price action. Make sure y'all hit that like button. Are y'all paying attention? Is this new to y'all, or y'all just trying to watch what I'm doing? Let's go down to a 5-minute. 5-minute time frame. We're showing heavy weakness right now. So on the 5-minute, we traded up into this what? What is this right here? Trade up into this what? There y'all go. See how the market retraces to that? Order flow, what? Order flow is what? Market maker what? Look over to the right. Market maker buy model. We trade up into a premium level. Now what? Market maker what? Look how we drop down, touch the top of this hourly fair value gap. That's the top of the hourly fair value gap. Let me go ahead and throw up a split screen. Let's do a split screen. On the right side of my screen, I'm gonna go out to the 1 hour time frame. Still a consolidation. There goes that 1 hour fair value gap right there. So what I'm gonna do is I'm gonna hide this 4 hour in orange. I'm gonna hide that. It's still there, but I'm just gonna pay attention right now. We know we got sell side liquidity in below the market. Also, market conditions. Let me see right quick. Starting to become high resistance, but we'll see. So if you look at the buy program over to the left, that was a high resistance liquidity run. And then we reverse. We made a reversal. High, check it out. Pay attention. High, low, higher high, displacement lower. That was a shift in market structure right there. Or let me see right quick. Let me use this one. I need to hide this. So check it out. Swing high, high, low, higher, high, displacement lower, SIBI. Five-minute SIBI right there. Trade up into it, displacement lower, displacement lower. And right now we're just consolidating. We got 3 more minutes into the macro end. So now let's go down to the 1 minute time frame. 1 minute time frame. And remember, on the higher time frame, we're just consolidating around. So how y'all feeling, man? What y'all feeling next? I've seen some people saying regulations are next. What y'all feeling, man? What y'all feeling? Y'all let me know in the comments. How y'all feeling? What's y'all expectations coming up for Q2 2025? Q2 2025. Which we only have like 11 days left. 11 more days. Now I'm about to drop down to a 30-second. Let's go down to a 30-second time frame. 30-second. Each one of these candles take 30 seconds. These levels above the market, they are premium arrays. So premium arrays. ZZ, it's setting up. It's setting up. If you just joined in, I went over the I'll show you here in a minute. It's definitely, as we drop down to this discount on the higher time frame. So let me bring my split screen up. And let's do this right here. So this is the higher time frame, 1 hour. Today, we formed a large BISI in the market right here. So this area in price, it was inefficient. They didn't offer any selling in this area. They did drop it down right here, but now the market is just consolidating. So they might want to drop it down a little bit more, go take out some liquidity. And as they do this in this process, that's them offering themselves a discount. Right now on the weekly time frame, we're consolidating. So we're waiting for that sponsorship to kick in. So the inception of the move was, like I said, back here, which was on the March 10th, when they dropped it down to this weekly fair value gap. And you can see the market has, in a high resistance liquidity condition, starting to move higher. It's just chopping around, and then today, boom, displacement higher. So what I want to see now is, if I go out to the, let's go out to the weekly time frame. What I want to see on the weekly time frame, I want to see us, we have to get through this SIBI right here. So I want to see us cut through this SIBI eventually. If not, if we don't cut through this SIBI, which is highlighted in gray, and there's 2 of them, we need to cut through this SIBI and start taking out old highs. If we don't do that, at minimum right now, and I don't know if we get it this week because it's been a volatile week. Clearly that reaction in the SEC dropping the case, it didn't do much to the market. It brought some sentiment, but I guess we're waiting, because I also showed y'all how the market, things are already baked into the market. So I'm assuming they have something else baked into the market that will give it sponsorship to move price higher. And that's when they inject liquidity into the market. But right now, we got this SIBI. At minimum, I want to see it come up, touch the bottom of the SIBI. And then we have some liquidity that's embedded. After we go to the bottom of the SIBI, I want to see us reach up to the midway point. At the midway point of that is 275. 275. And we got a lot of cutting through. So we got a lot of stuff to get through. There's liquidity on lower time frames that's embedded. And then we got all these old highs in the market. So again, we need that institutional sponsorship. Now, I'm already forecasting, like I said, the first quarter of 2025 is pretty much done. So as soon as we cross over into April, I want to see where we close the first quarter, and then I want to see how we open up first day of April, which will begin the second quarter of 2025. That's what I'm waiting for. So I'm waiting for more information, because you can see the market's just ranging, consolidating. So from the 3-month down to the monthly, it's expanding higher. It's setting up to go higher on the monthly. But as we drop lower down to the weekly, you're going to start seeing it consolidate. So consolidation. And why is it consolidating? It's waiting for that month, that quarterly close, and it's waiting for the month of March to close. So that's what we're waiting for right now. And we have 3 more days for this week to complete. So this weekly candle, within 3 days, anything is possible. More announcements, anything. But right now, my expectations are low for the remaining of the week. Now, we can see what we do Thursday, Friday, but if we don't do nothing by Friday as far as moving higher, the week is over for the most part. So down to the daily, and at any moment they can bring liquidity to the market at any moment. So it's already began. It's already began. You say you love what Ripple is doing for the custody of digital assets for institutions, and it appears they may go live in retail this year. That's a possibility. I did see something with Ripple in custody. Let me see if I can go pull that up. But hopefully that answers some of y'all question right now. Right now we're just ranging. Again, y'all already know what market profile we in, consolidation. ZZ, I went over that earlier, but definitely, most definitely. That's why I keep saying, I'm trying to see how we close the first quarter, the month of March. Wherever we close March at is going to give me further information. March is almost done and they're just dragging it out. But I am glad that they ended the court case first quarter of 2021. So let's see how we close the rest of these 11 trading days out for March. And it still will be in play. So it still will be in play, but that was strong. Today, the SEC dropping the court case, that was strong momentum. That was strong sentiment. I mean, that was a strong sentiment. And what's holding XRP back now? I don't see nothing really holding it back at this point. As far as fundamental news, like as far as adoption, we know we got to get through regulations, but now banks and institutions can go ahead and start accumulating these assets. And what's really stopping it besides regulations? So hopefully I explained that to y'all. Like again, you can visually see the consolidation in the market. The trend lines, that's where the orders are in the market. So that alone right there is a killer. Like you can't beat knowing where the orders are in the market, because the market makers are trading these markets. So let's go down to a 5 minute. Again, on the 5 minute, we would just retrace back up into this SIBI. Let's go back down to the 1 minute. Let's see if we can start displacing lower. We just ended the first quarter of the hour. So from 10 to 10:15. Now let's see if we can start displacing lower. And let's go down to a 15-second time frame. Now we're going to start looking at high frequency trading. Every one of these candles take 15 seconds. Every one of these candles take 15 seconds. And this is what I'm talking about, you investors. Y'all asking me, do you see this? Do you see that? But this is where the money is made. This is where the money is made, showing you these concepts right here. We're trading down into this, what fair value got? Who's paying attention? What time frame is this blue shaded area? What PD array is that? Who's paying attention? Who's really paying attention? Displacement lower, down into the gap. What hour? What time frame is the blue shaded area? And y'all saying Trump got something tomorrow at the Digital Asset Summit? Oh, shout out to you, ZZ. You definitely paying attention. Shout out to y'all, Gabrielle. Definitely paying attention. So look, on the 1 hour time frame, I'm gonna throw up those quadrants. I'm gonna lay a Fibonacci from the high of the gap down to the low of the gap. right there. Now, in between the the top of the fair value gap and the upper quadrant, that we're in between that right now. And also we got liquidity resting below there. And then if you really wanted to get super technical, you can look at this Fibonacci, this wick. That's a ghost pool. That's a ghost pool. We can rappel off of that. We either can rappel off of that or drop down, take out the liquidity, come down, touch the top of the fair value, the top of the quadrant right there. So let's go back down to the 1 minute. You can start seeing us roll over. So now everybody on social media, they're panicking. Seth, I don't know if you know any Elliott Wave AA, but could you see a triangle? I don't use that, Seth. I don't use none of those concepts. Clearly, nothing you've seen over here has been talked about before. I mean, it's been talked about, but those are retail concepts using Elliott Waves and whatever retail does. I don't go off of retail and what they do. I don't. Those retail concepts pretty much don't work. When I'm doing my analysis, I'm looking at pure price action candlesticks. Yeah, I might have a lot of stuff highlighted on my charts, but they're based off the candles. They're based off the candles. So again, 1 minute time frame. There's a 1 minute SIBI right there. Do we want to trade back up into that? I don't know. Let's see. 8 seconds for this candle to close. After that candle close, we're going to get a little small SIBI right here. Let me go ahead and highlight that. Boom, just like that. Trade up into it. And let's displace lower. Goes to midway point. Fills the gap. Trades above the gap, but let's see right quick. Let's see. Let's zoom out. Anytime it does that, you want to zoom out. Let's zoom out. Also, there's one above it. There's one above it. Maybe, let's go out to the 5 minute. On the 5 minute time frame. On the 5 minute time frame, we just traded down into this BISI right here on the 5 minute. And then we just began a new 5 minute candle. So this BISI right here, I'm not even going to highlight it. There's a 5 minute BISI right there. Go back down to the 1 minute. See how it trades up into that? Let's go down to the lower time frame. Let's go down to a 15 second. And remember, we're trading inside of a discount now. We're inside of a discount. So if you wanted to be a short in the market, the inception of the move was at a premium. You should have been selling up here at a premium. But now you're holding your position. If you was selling, you're just going to be holding it. So look how the market trades up to these levels. And now we're displacing lower. This is a 15-second time frame. Every candle that prints takes 15 seconds. So from the 15 second, let's go down to the 1 second. 1 second time frame. And this is what I mean by high frequency trading. And this is what I mean by this is where the money is made in the markets, y'all. This is where the money is being made. If you're a long-term investor, you're not playing this type of game. You're not in this game right here. This is not your lane. A lot of people might call this noise. I don't call it noise at all. It's algorithmic. Volume imbalance. So what you do now is, again, that's 1 second. Let's go out to the 15 second. Let's go out to the 1 minute. 1 minute time frame, candle close. Boom. Sibby. And again, it's not necessary to go below a 1 minute time frame. It's definitely not necessary to go below a 1 minute time frame. But what I'm trying to see is if it wants to reach down further inside of this gap. If we just zoom out over here, we got a ton of liquidity below the market over here. So let me go ahead and refer to that. We got a lot of sell side liquidity right here below the market. Those are minor liquidity pools. So I'm gonna go ahead and reference that. Sell side liquidity. Look over here to the left, market maker buy model. Over to the right, market maker sell model. That's all the market does. It goes from a premium to a discount to premium. And let's see if it wants to drop down, take out this liquidity right here. Right now it's trading back up into that SIBI. And then there's an order block right here. There's an order block. Let me go ahead and highlight that order block. Opening price of this candle right here. Trade into it. Then what I'm gonna do now is I'm gonna take a Fibonacci and I'm gonna lay it on that order block and get the midway point of the order block. So do y'all think it's random? It's just going randomly to that level? Do you think it's random? Do you think it's random? Is it random that it goes directly to that order block where I lay that trend line and then starts to move a lot lower? Next stop will be the midway point. And this is what we call tape reading. This is what we do. Tape read the markets. This is how you understand what's going on. Tape reading. Let me look at the higher time frame. What's going over here on the let me see right quick. Let's go out to the 1 hour time frame. Again, on the 1 hour, we're trading down in the discount. So at any moment in the discount, we can displace higher. So I was just trying to see how far down into the discount do we want to go. Again, market profile, still consolidating on the 1 hour. You always want to stick to the higher time frame narrative. We just traded back up to this 1 minute SIBI. But if these markets if this market is very bullish, it's going to move higher. It's going to start wanting to move higher. And then tomorrow could be definitely an exciting day. So right now, so far in Asia, we're just consolidating, ranging. Left side of my screen is the higher time frame. Right side of my screen, the lower time frame. And maybe possibly tomorrow we can definitely, let's see the impact of Trump speaking on crypto. Let's see what that impact has tomorrow. So it definitely could be built in. Right now, we're just trading on the higher time frame down in discount. So this order block right here, that failed. So I'm not going to consider it. We just traded down to a BISI over here on the right. right here. Buy side imbalance, sell side inefficiency. And the markets, this is high resistance conditions, high resistance liquidity conditions. So shout out to everybody joining. If y'all brand new, make sure y'all hit that like button and subscribe to the channel if y'all brand new. Shout out to y'all. So you can see the market come down a discount. Let's see if we want to start displacing higher and leave the 1 hour fair value gap. That's what the 1 hour fair value gap is for. It's trading down to discount. Now let's see if we want to displace higher, cut through these candles, and then come back up to a premium level. Do you see the price levels that we just ranging from? Just trading up and down different price levels. Again, we need some type of sponsorship. It's showing weakness because if it was going to displace higher, it would have done so. So again, I know where the levels are below the market, deeper in the discount. But if we're really going to move away from the discount, it would have done it already. So you can see it just ranging right here. Here in 1 minute, we will end the second quarter of the hour, and then we will go into the third quarter of the hour. So let's see what we do. But you can see how it traded back up into this 1 minute SIBI. Again, you got to be careful if you're trying to short at this moment. You got to be careful because we're already at a discount on the higher time frame over here on the left. So, but we know that there's liquidity below the market, and what it's looking like it's doing is, look at this wick over here on the 1 hour. Look at that wick. That's a ghost pool. So if I take a little Fibonacci on the left side of my screen, down to that right there, boom. Look at the price level that we're trading in. So it's so much going on, so many levels in the market. So again, I'm taking this wick over here on the left side of my screen, which is a ghost pool. The opening price of that candle down to the low. Look how the market is trading down, boom. So that's what we're pretty much seeing. So over here on the lower time frames on the right, you can see us trade down there, and it wasn't random that we just rejected that level and came back up into the range. No, it dropped down. That's a ghost pool level, which is a discount, and boom, displaces back higher up into this 1 minute SIBI. Now, what I want to see if we want to sell off. It's looking weak. So, okay, we're in the third quarter of the hour. So 10:30 to 10:45 Eastern Standard Time. Now let's see if we start getting displacement. And remember, these gaps, we can cut through them and use them as inversion. So on the 1 minute, it's dropped down to the 15-second. High frequency trading. Small little SIBI right there on the 15-second. Small little SIBI. Trade up into it. Shout out to you, Donna. Shout out to you. It's a 15-second SIBI right there. You can see we trade up into it. We can go through it a little bit and then go and cut back down. Now let's see what we want to do. Displace lower. Any update on the Patreon? I'm definitely working on the Patreon. Again, it's life balance. Again, each one of the videos that I create on the Patreon, it goes up to an hour, and then, you know, I got family, I got a son, so it's coming. Definitely, trust me. When I say I'm putting my all into it, I'm definitely putting my all into it. And then when I do live streams, you gotta pay attention to this. When I do live streams, I pretty much take away from me creating the Patreon. And a lot of stuff that's gonna be in the Patreon is the stuff I'm outlining for free right here. So it's definitely coming though. It's coming. And again, when I'm ready for it, I'm gonna release the beginner tier. I'm gonna release the beginner tier shortly, hopefully. Matter of fact, I got some videos to upload tonight, but I'm definitely gonna release the beginner tier. So look at the last 15 minutes right here. There's sell side liquidity below that low right there. Boom, sell side liquidity. But I appreciate y'all inquiring about it. Appreciate y'all inquiring about it. It's definitely coming. I think the anticipation is kind of high for it. Displacement low. Attack that sell side. Boom, just like that. Do you think it's random? Y'all think that's random? Y'all think that's air that y'all breathing? Why did the market drop directly down to that liquidity pool right there and do what it does right now? Do you think that's air you breathing? And again, high resistance liquidity condition. High resistance liquidity conditions. Now we trade back up into the range. And also this ghost pool right here. We drop down to the ghost pool. We take out the last 15 minutes. So watch this. If I drop out to the 15-minute time frame, you're going to see the previous 15-minute candle. Let's go out to the 15-minute time frame. And then on the 15-minute time frame, look at the previous 15-minute candle, which is right here. We just dropped down to that low right there. Took it out. And that's what I showed you on a 15-second time frame. On a 15-second time frame, how am I able to see that on a 15-minute time frame? Am I working with something or not? See how we trade down there? The previous 15-minute time frame. So how many opportunities in every 15-minute candle? Like, man, this shit is crazy. How many opportunities can you find every 15 minutes? Just like that. So I can show you one right here. Well, this was a inversion gap right here. And inside of this inversion gap, there was a SIBI. Right here, SIBI. That's a 15-second SIBI in the dark gray shaded area. We traded up into it. Let's say you set a limit order at that 15-second gap. And remember, this 15-second time frame is way easier than that 1 second time frame. I can't trade a 1 second. My human capacities can't trade that fast. But we trade up into that, boom, right there, and drop down to the previous 15-minute candle. That's a return of 0.22%. So imagine, check this out. Man, imagine an algorithm placing, let's say 50 limit orders. This is what algorithms do, and there's no limits to what you can do. Imagine an algorithm placing 50 limit orders right here at this sell, at this fair value gap right here, and then trades down. So let me do some math right quick, and I'm gonna ask y'all what this is. Let's say right quick. Let's say I'm an institution and I have $500,000. And I'm going to risk 1%. What is that? Y'all tell me what that is. $500,000 times 1%. What is that? Tell me in the comments. And I'm pretending I'm an institution. I'm pretending I'm an institution. Because, you know, institutions have the capital, they have the liquidity. $500,000 times 1%. Anybody know? Anybody whip out their calculator? Anybody whip out their calculator? $500,000 times 1%. Shout out to you, Daryl. I knew, Daryl, I always can rely on you. Shout out to you. Shout out to you, Lenny. I can rely on you too. Shout out to everybody that's participating, sitting in the front of the classroom. So y'all that are in the back, y'all might want to come to the front of the classroom and learn you something. Try to learn you something. So that's one trade. So I'm pretending I'm an institution. $500,000 times 1%. That's what you're risking. You're risking $5,000. Matter of fact, no, you're not. My bad, y'all. Check this out. Scratch that. Let's use what I'm actually outlining. So we're going to use just pure technical analysis. So on this chart right here, your limit order, you're going to enter at the bottom of this fair value gap right there, which is a 15-second fair value gap. That's where your entry is. Your stop loss, this is where you're going to place your stop loss. And then when I place the stop loss, that's going to be our risk. So our stop loss is going to be at this high right here. Boom, right there. At this swing high. So if I take a ruler and I measure from entry up to the high, that's 0.06%. So again, let's take $500,000 and get y'all calculators out. $500,000 times 0.06%. And what is your risk? Which is minuscule. Like, you damn near can piss that away. It's you can damn near give that away. So $500,000. I'm pretending that I'm a large institution and I'm an algorithmic trader. I have that much in equity. There y'all go. $300. That's $300. So you're risking $300. Keep that in mind. Your reward is from entry. And y'all watch me do this real time. Like, I'll outline this real time. From entry down to this low right here. At that low is sell side liquidity. That's a return of 0.22%. So $500,000 times 0.22%. What is that? There you go. Shout out to you, Daryl. Anybody else? $1,100. Now, check this out. When it comes to trading, there is no limit on how many orders that you can place. That's why algorithmic trading and high frequency trading is more superior than long-term investing. So, with that being said, what you do is you multiply your take profit, which is $1,100. We're going to place, and that's one contract. What you do is you want to place, let's say 100 contracts, because this is what bots are doing. This is what algorithms are doing. So what's $1,100 times 100? And you can think I'm bullshitting if you don't believe me. What's $1,100 times 100? You sure, Daryl? I got $110,000. I got $110,000. Y'all got your calculators out? Are y'all calculating? Okay, Gabrielle, you got 110. So, okay, what we did was we pretending we are not an algorithm. You don't have to be an algorithm to do this, but algorithms are doing this. So, for example, 100. Let's say I forgot what I was about to type. Entry. And down here is TP. We're risking I forgot what was the point, 0.0%, 0.06%, which, okay, if we only added one contract, that would have netted us $1,100. But what we did was we added 100 contracts. So let me add that right there, 100 contracts. So boom, 100 contracts. Okay, so 100 contracts. We're pretending we're institution. We have 500,000 in equity. So let me add that. We have 500,000 in equity. One second. Hold on 1 second. God damn it. I'm trying to figure out why y'all comments ain't coming up here. Okay, let's get back to what I'm saying. We have 500,000 in equity on this particular trade. You said we risking 30K, so our risk was 0.06%. So 500,000 times 0.06%. That's $300, and we're going to add 100. So $300, that was our original risk on one contract, times 100. That's $30,000. Great math, Gabrielle. Great math. And we're taking profit for $110,000. Down here, take profit. Great math. I'm glad y'all can see this and visually are participating. And I'm glad that y'all can see what I'm outlining. And this is what I'm demonstrating by high frequency trading, while most investors are waiting long term to get these type of returns. If you are somebody who has a lot of capital, a lot of equity, it don't take you that long to run up a bag. And I'm pretending that I'm a financial institution. So entry, TP, stop loss up here. So let me add that. So there we go. So how long did that trade take? How long did that trade take? Remember, this is a 15-second time frame. So from entry, boom, right here, down to your take profit right here. That trade, pay attention, or can y'all see it? That trade took 2 minutes and 30 seconds. And this is what I mean by high frequency trading. Can y'all believe that? Do y'all think that's possible? Do y'all think that's real? So if I'm a large institution, why would I care about what you investors think about? Why would I care about what y'all investors think about? You said it's so good, it's almost unbelievable. Who else is, okay, who else, I hear what you're saying, Gabrielle. Who else is exposing this information? Who else is telling y'all? Most people are doing traditional investing, but people are frustrated because guess what? They don't know what's going on in the market. And these large institutions, this is how they're making killings. Like if y'all ever see those articles where it says 100 billion or $1 billion liquidated in the market in one day, who else is working with that type of capital besides large institutions and financial institutions? Appreciate it, ZZ. I appreciate it. So look, we sold the market within 2 minutes and 30 seconds, $110,000. And I'm pretending I'm a financial institution. I don't have 500,000 liquid like that, but large institutions do. These market makers do. These central banks do. They have more. They're working with more. So all you got to do is replace your equity with whatever number you want to. Replace the equity with whatever number you want to. And that will give you what kind of money is being pushed around in these markets. And you watch me highlight these price levels real time. I didn't make none of it. Go back and watch it. I outlined these levels. I told you, hey, I outlined this low. I said, hey, there's liquidity right there. The market did what? Went directly down there and then reversed. And as it reversed, what did it do? Boom, come stop you out. See the stop loss? If you was to hold that position, which most long-term investors do, or people who don't know what's going on in the market, they will try to hold that position and then boom, get liquidated out the market. You said crickets? Hey, that's what's going on. So hopefully, hey, that's what I'm outlining for y'all. You know what I'm saying? Y'all getting that advance. And again, I can't make this up. 2 minutes and 30 seconds, $110,000. What would that do for your life if you understood the skill set? And then the market, what? Market maker sell model down to a discounted rate, market maker buy model. And what they're doing is they're buying it back in the opposite direction. Look down here, BISI. After they offload their shorts below that low, they reaccumulate at discount. Reaccumulation, boom, right there. First entry, displacement higher. Do I have to put the money behind this one? Let's look at this high right here, boom. So after making $110,000, our equity goes up to what? $610,000. So now after we took profit, we're going to have $610,000 right here. $610,000. Entry, boom, right there. Stop loss. Stop loss is going to be right here. Let's measure our risk from entry down to stop loss. That's 0.05%. So we're risking 0.05%. So what's $610,000 times 0.05%? $305. Now multiply it by 100. Because we're going to do the same thing. We're going to put on 100 contracts. $30,500. Shout out to y'all. Y'all got them calculators out. $30,500. So guess what the market does? After they sell the market down, they take profit, which they're offloading their short positions. And then what they're doing is consolidation, market structure shift right here. Look at this high right here. Look at that swing high right there. Market structure shift after we break that high. So pretty much low, high, lower, low, displacement higher, shift in market structure, but you can get in before that because guess what? You can wait for confirmation, which is the shift in market structure, or you can go ahead and take more risk, which is like, this is more risky doing it before we have a signature or indication that the market has shifted, but you can get in early. But if you want further confirmation, look at this SIBI right here. I mean, it's BISI. Look at that BISI. If you're too scared to take this one, there's another opportunity right here. Must I outline it? Right there. Another BISI. Boom. So again, just know they're buying and selling in both directions. But let's stick to our original trade. $610,000. We're risking $30,050. What's our take profit? Our take profit is going to be at this high right here. That's going to be our take profit right there. So let me go ahead and let's measure our TP. Right there. So let's measure it from entry up to the high. That's a return of 0.28%. So get your calculators out. 610,000 times 0.28%. And we're going to add 100 contracts. Now add 100 contracts. There you go. Shout out to you, Daryl. $170,000. $170,000. You got to add the 10 contracts, Lawrence. I mean, not the 10, the 100 contracts. You got to add your 100 contracts. Added at 1708, you got to add your 100 contracts. And then what do y'all get? So, okay, after 2 trades, check it out. After 2 trades, what's your total take profit? On the first trade, we made 510. Well, 110,000. In the second trade, we made 170, 800. So at the end of the day, starting with $500,000, what do you end the day on? And listen, matter of fact, the first trade only took 2 minutes and 10 seconds. 2 minutes and 30 seconds. This trade, let's see how long it took. This trade took 4 minutes. So y'all just do the math. Roughly, let's say 4, 5, 6 minutes and 30 seconds. How much money is that? You said 281K total profit. And at the end of the day, what did you grow? What did you multiply your equity starting with $500,000? What did your ending equity end with within 6 minutes and 30 seconds? And this is what I'm trying to tell y'all. This is what I'm trying to explain to y'all what's going on in the markets. This is what I'm trying to show y'all. What's your ending equity out of 2 trades that lasted 6 minutes and 30 seconds? What's your total equity? Your equity grows to $710,000. I mean, excuse me, 780, 800. That's your equity after 6 minutes and 30 seconds. So first trade was 110. Second trade was 170, 800. And that total time frame lasted 6 minutes and 30 seconds. So this is what I'm trying to explain to y'all, that this is what's going on in the market. I outlined 2 trades, real time, high frequency, and you long-term investors, you know what I'm saying? You long-term investors, I'm not shading them, I long-term invest, but I also know what's going on inside of the market. And this is the type of capital that's flowing through the market all day, every day. And if you go back and watch my live stream from yesterday, it gets even scarier. This is how far I can conceive it, because I'm only human. I'm not AI, I'm not a robot. But this is a 15-second time frame. But imagine doing the same thing on a 1 second or sub 1 second, like this. Like this. You know what I'm saying? Imagine it doing it from this perspective. Every one of these candles take 1 second or below, and the market makers and the algorithm are just gobbling up money, printing money at will. It's either going to reach for the sell side or the buy side. And again, I cannot perceive this. I cannot conceive this because my human motor skills are not fast enough to keep up with this. But there are people who know how to code. And it gets even scarier. Remember, market makers are trying to trade at the speed of light. They're trading at the speed of light. So If you're not making money at the speed of light, what are you doing? What are you doing? They don't have time to be waiting. Boom, just like that. Buy side liquidity. And then boom, displacement higher. So if you're not trading at the speed of light, what are you doing? And that's what I'm trying to get y'all to see. Start trading at the speed of light. And we're inside of a macro. It's 10:50 to 11:10. This is inside of a macro, and we're trading back up into this 5-minute fair value gap. So I'm gonna let y'all go this evening. Hopefully y'all learn something. For the ones that be coming, y'all starting to see this stuff open up, and me unlocking the matrix for y'all. Y'all see me unlocking how much money is being made inside of this market, both directions, all sides. So hopefully this was insightful to y'all, and hopefully this can inspire y'all to want to pick up this skill set, because yes, you're going to get wealthy eventually in XRP over time, but what are you going to do with that wealth? Some of y'all are going to have more than $500,000, especially you, Ike. You're going to have way more than $500,000. So, and I'm talking about comfortably. You're going to have, some of y'all are going to be so comfortable that $500,000 is like $5,000. But where could you put that money? You could be putting it to work like I just showed y'all. I showed y'all 2 trades that in total lasted 6 minutes and 30 seconds. One trade lasted 2 minutes and 30 seconds. One was 4 minutes. So hopefully this is intriguing y'all. As soon as I am able to be liquid at some point, like I'm talking about like liquid, like I just demonstrated, like 500,000 and deploying it into these markets. That's the type of things I can do. I already can do it. I'm just somebody who doesn't have that type of capital to put into these markets. I'm still a retail. I just had this skill set. But at some point in the future, I'm going to be able to have that type of capital to put to work. So I got the skill set for now. I know what's going on in the market. So I got an advantage. And I just grow my little coins over time. That's what I do. I just grow my little coins over time. But imagine being a large institution and a smart money market maker. Imagine doing that in 6 minutes and 30 seconds and then going to buy two properties, 2 houses. Imagine that. Could y'all imagine that? To be honest, me personally, I only need one of those. I don't need both sides of the market. After I get that type of trade, I'm out the market. I'm done. It's no longer needed to get back in there and be greedy. $110,000 was good enough. That's just me personally. So, all right, y'all sure already know what I outlined. I'm gonna go ahead and get up out of here. I definitely appreciate y'all joining. Hopefully this was insightful. It's another one. I mean, y'all give me some feedback, man. Every time I go live, how are y'all how are y'all taking this in? Y'all know I can't really talk to y'all, so I'm just trying to figure out, the feedback. Give me some feedback before I head up out of here. Hopefully I'm teaching y'all, man. I'm teaching y'all a lot of stuff. Shout out to you, Sneaky. I appreciate it, man. I appreciate you coming every time. I appreciate everybody that come and show love. I see the ones that come up consistently. So if this channel ever grows, I'm definitely going to remember the ones that showed up every day. No doubt. Most definitely. Appreciate y'all. Shout out to you, Texas Plate. Shout out to you, Lenny. Shout out to you, OL. All of y'all show up every time. Shout out to you, ZZ. The Patreon is definitely coming. No doubt. I'm going to be like this. What I just showed y'all on those lower time frames, that's going to be for the premium. I'm throwing it out there just to present it to y'all, but it goes even deeper than that. Appreciate it, Ike. I appreciate it. I appreciate it, Gabrielle. Shout out to you, Law Docs. You say you're exhausted trying to keep my eyes open. Where you at, Law Docs? What part of the world? What part of the world are you residing in? What time is it on my side? It's 10 o'clock my side. That's why I'm gonna go ahead and get up out of here. Anytime I go late, I know a lot of y'all, you gotta go to work in the morning and all that. So I don't want to occupy all y'all time. Hopefully this was insightful. Yeah, I was busy earlier today, Law Docs. I was kind of busy, so I didn't want to. And then I let everybody else fight for the algorithm as well. I let them have it because ain't nobody presenting what I'm presenting on this channel. I'm telling you, nobody in this space is presenting the things that I'm presenting to y'all. So you got to keep the best for last. Got to keep the best for last. Says you're Central Florida. Okay, you're on East Coast time, so no doubt. So I'm gonna let y'all head up out here, man. Y'all be on the lookout. I'm gonna be definitely watching the markets. Anything that happens, I'm gonna be right back. So make sure y'all hit that like button, subscribe if y'all brand new to the channel. And I appreciate y'all joining, and I will see y'all on the next live stream. Peace out.